What's up, guys? It's Brian from Hashware Hub, and today is December 20th at about 10:50 in the Eastern Time, coming to you with another trading video. Bitcoin Cash here is a subject on this one. But first, hit the subscribe button, hit the notification bell so you get all of our information directly to you. Bitcoin Cash, man, oh boy, are we happy we own this. So crazy day, huge day. Each day we get more and more surprised at how this market is moving up, and all the markets are moving up. So if you are familiar with our videos, you may notice that this screen here is a little bit different. We added some additional indicators that we don't normally use, but we'd like to show them to you because they're used in particular circumstances. So we're going to get through that right here. What we're looking at is a Bitcoin Cash daily chart. Each day is represented by a single candle here. The market is obviously super bullish. Most of our indicators are showing that. The trend strength is indicating that. The detrend is indicating that. It's mooning. And MACD, same thing here. Now what we're going to get into is, this is a sine curve. I know it doesn't look like the traditional sine curve. And what we also have below it is RSI. Now you've heard us say a million times over and over and over, we don't use RSI. We don't use RSI. But I have it here because it's a good comparison with regards to the sine curve here. Now the sine curve is a sine curve that is calculated with the underlying market data. It's pretty complex as far as the calculation is concerned, but it's not complex to understand. The sine curve, all sine curves are cyclical, right? So the sine curve is best used in markets which are cyclical. These markets in particular, meaning the cryptocurrency market, have not been cyclical really at all. They've been going one direction, and that direction is up. They've been, aka, trending. So why are we using them? Why are we using this sine curve? We're using this sine curve because the sine curve is a great way to get into, is a great additional way to get into low risk entry positions in the direction of the overall trend. The direction of the overall trend here is up. So you may be saying to yourself, well, Brian, you've been saying that that's what this blue line is for. Totally. That blue line is for not only that, but for other things too, which I've mentioned several times over. However, the sine curve is a great addition to this overall package. And it's something we use kind of behind the scenes. Now, what we don't like to do is we don't like to clutter the screen with all sorts of different indicators, because something, that's not a good thing and does not make for good, consistent trading. But we utilize a sine indicator in certain circumstances. I don't even look at it every single day. It's just something I'm like, oh yeah, cool, we got that. We developed that. I forgot about that. So let's go take a look at it again because it may have an application here. It goes basically like that. That's the thought process. RSI, again, we don't use it, but you can see that the sine curve tends to try to make tops and bottoms, try to go to extremes much more so than the RSI. And that's one of the reasons why we like it so much. Okay. It's also fairly predictive. The sine indicator is pretty predictive, far more so than like a RSI would be. So let's try to take an example here. Let's see here. Okay. So you can see here that the sine indicator said basically to go bullish right here, right? But it took, if you were doing the RSI is kind of middle of the road. It's not in an oversold position. So if you were just using the RSI, then you wouldn't really be like, oh yeah, cool, this is a good buy. You wouldn't even think about it. But with a sine indicator, you would. Similar situation here too. Okay. And a similar situation here too, okay, where the market went up. So you can see why it could be used. You can also make the same argument here too. Okay, RSI is middle of the road, sign indicator is not. Okay, so that's one of the reasons why we like it much, much better than the RSI. Why we don't even use the RSI is because of this. So now, what can we be saying to ourselves here? So Bitcoin Cash, how do we trade it? Well, you could have gotten in all throughout here, as we did, and here too. And you may, and here as well. You may be saying to yourself, well, Brian, you weren't making videos on this. Well, yeah, no, we weren't making videos on this. Reason why we weren't making videos on it, because nobody, A, was really interested in it, or B, nobody was really even asking us. So it's not, doesn't, and we look at all sorts of different charts. I mean, probably 5-6 times the amount of charts that we actually make videos on. We would be making hours of videos every single day, and nobody would be watching them. So that's one of the reasons why we have to be rather selective regarding what we make videos. So that's why we sometimes say, hey, leave a comment below or email us and tell us what videos you'd like us to make. In other words, on what particular cryptocurrencies. So we can do that. It's not a problem. So really, what's going to happen here? So Bitcoin Cash may continue to run up north here, totally. But as we always say, it always makes sense to kind of take a little bit to reduce your position. Now, you may also be saying, well, Brian, you normally say that when the trend is kind of going in an opposite direction of the actual trend of the market. Totally. That's where we are more aggressive in doing that. But it doesn't mean that it would be wrong to do this. It does not mean that it would be wrong to go ahead and take a little bit of your position off. Even something as small as 5 or 10%, because you're de-risking. There's nothing to say that this market wouldn't just plummet the next day. There's nothing at all, right? You can look at the chart, you can say, well, okay, there's no patterns with regards to currently right now the way in which it's trading that would indicate that this thing would plummet. Yeah, the probability is low, but it could happen. So that's one reason why we would say, okay, you can take a little bit off. Or what you could do is you can put a sell limit in of saying, okay, let's say 5,000. Let's say, an additional $1,000 more than where it's trading right now. You can go ahead and do that. Take it off at a higher point. So while you're at work all day or doing whatever you're doing, if the market were to tick up there, you can then go ahead and sell a portion of your position with a limit order. And that's one of the reasons why we love limit orders so much. For that reason, also the fact that on GDAX you have to pay 0 transaction fees if you use limit orders. So it's another little tidbit there. So yeah, this is the way in which we are going to look to trade Bitcoin Cash going forward. Now, if you wanted to be, if you wanted to think about where to put your protective stops would be right at the top of this blue line here, and that would be a price of about, let's say $2,400. Okay. I don't think the market's going to come down to $2,400 all the time soon, but it may. And if it does, you may want to go ahead and hold on to your profit, right? How dumb would you feel if the market were to come plummet down? You didn't have any protective stops in this area right here, and you got in right here. And let's say you get out of your position at, let's say, 1,500. Meanwhile, the thing was at like 4,000, right? Then you'd really be kicking yourself. So it's another reason why you put, protective stops in, or you try to de-risk the position. So another way you can trade this too is by getting a little bit out here and then possibly trying to pick some up here if the market were to come back down to the blue line, or as the market continues to drift sideways or drift up and the blue line comes up, you could then go ahead and then repurchase some Bitcoin Cash around the blue line level at a lower risk trade. Now, what we like to see is this, exactly this right here. Okay, what we like to see is exactly this right here. Okay, where the market was along this blue line for quite some time. It was the blue line is indicating also as well that it's an uptrend. So the market's overall in an uptrend, and here the sine indicator made a nice bottom and it crossed over, right? So that's another additional low risk entry. Okay, another thing that we like to look at there is that also that the trend strength, okay, has been gumming down, and also the trend is kind of going sideways too. Ideally, what we would like to see is that possibly the trend strength would start heading north a little bit, and the D-trend also would be heading north a little bit as this sine curve starts bottoming and crosses over, and the market's at the blue line. That's like the holy grail. That doesn't happen often. However, what we don't see is the D-trend going sharply down, right? We see the market going sideways, and the D-trend is kind of going sideways to down. So it's not a huge divergence. So it's not like something saying, wait, stop, don't do this. Okay. Also with the D-trend, okay, it's going down, but you know, the market's been going sideways, and as the market goes sideways, the D-trend tends to fall off a little bit. That's just the way in which it works. So that's how we like to utilize these things. I'm trying to see if there's another good indication here. Oh, okay, yeah. So right here, this is really great. Okay, right here. Okay, we don't have the uptrend here, right? The blue line here. Okay, but what we do have is we have that the market trend is up and the trend strength is up. It just recently turned from a very bearish to more of a positive outlook right here. Okay, and the sine wave turned, and MACD, the green is over the red. Okay, so there's different pictures you can paint yourself with these indicators. Okay, it's not specifically fixed, this or that must happen. You need to paint yourself a picture and measure the risks that's apparent in getting in the trade. So yeah, I mean, that's really about it. So we're going to be taking a look at this in probably every single day, assuming that the market is changing enough, or as far as the levels are changing enough, in order for it to make it somewhat interesting. So again, any questions, leave a comment below, email us, hit that subscribe button, hit the notification bell, and any questions at all, you know, like I said, leave a comment or email us. Happy trading.